Hey everyone, welcome back to your weekly crypto market outlook. We've just wrapped up one of the most eventful months in recent crypto history, and heading into this final weekend of October, the market is trying to find its balance after extreme volatility, a US CPI release, and rotating institutional flows. Let's break it all down, from macro and policy to technical setups, sentiment, and the actionable trade plans for Bitcoin, Ethereum, XRP, and Solana. Macro and market context, CPI, policy, and the ETF pipes. Let's start with the big picture. After the wild swings earlier this month, traders finally got the data they've been waiting for, the September CPI report, which dropped on Friday, October 24th. The numbers came in slightly higher than expected, 3.0% year-over-year headline inflation, and 3.0% for core. That's basically flat compared to August, not a disaster, but still above the Fed's 2% target. So, what does that mean? The market's reading this as easier than the first half of the year, but still data dependent. The Fed isn't slamming the brakes anymore, but they're not ready to hit the gas either. In short, policy is balanced, not aggressively hawkish, and that's why risk assets are still alive. Now, let's talk about what really matters for crypto: flows and positioning. Earlier this month, when Bitcoin hit new all-time highs above $125,000, we saw a record $5.95 billion in weekly inflows into crypto ETFs. That included $3.55 billion into Bitcoin, $1.48 billion into Ethereum, $706 million into Solana, and $219 million into XRP. Then came the October 10th to 11th liquidation event, the biggest in crypto history. A shock tariff headline hit thin weekend liquidity, wiping out $19 billion in leveraged positions. Bitcoin plunged to about $104,800, Ethereum to $3,400, and alts dropped 40 to 70%. This week, the flow picture reversed slightly. According to CoinShares, in the week ending October 20th, we saw $513 million in total outflows, driven mainly by Bitcoin ETFs, minus $946 million. But here's the twist: Ethereum, Solana, and XRP all saw inflows. Ethereum plus $205 million, Solana plus $156 million, XRP plus $74 million. That rotation is important. It tells us that while Bitcoin is consolidating post-crash, institutions are quietly adding to ETH, SOL, and even XRP, a potential leadership shift under the surface. Add to that the regulatory improvement, the SEC's September 18th approval of generic listing standards for commodity-based ETPs. That means future spot crypto ETFs can list faster, without case-by-case approval. It's a structural upgrade for liquidity and product diversity going into Q4. Bottom line, CPI wasn't a shock. The Fed's still data dependent, ETF demand remains healthy but rotational, and the market is reactive after the early October wipeout. Technicals, key levels, MAs, RSI/MACD, and patterns. Let's run through the charts, because structure tells you everything about conviction. Bitcoin. After peaking around $125K, $126K, Bitcoin collapsed to $104.8K during the liquidation and has since rebounded into the $111K, $115K range. Right now, $117K, $120K is your first real resistance zone, that's prior support turned supply. Above that, we've got $123,000 and then the ATH region at $125K, $126K. Support sits at $112K, $114K, with a stronger base at $107K, $110K, the same zone that absorbed selling during the crash. Momentum, RSI has cooled to neutral, MACD is still positive but flattening. Translation: momentum exists, but conviction doesn't. Bullish trigger, daily close above $120K, $123K with spot lead volume. That's your green light to target $125K, $130K. Bearish trigger, rejection at $117K, $120K, followed by a close below $112,000, that reopens $107K, $110K tests. Ethereum, ETH is up channel from the summer is still intact, but capped. The key ceiling remains $4.85K, $4.95K, the same zone that's rejected breakout since August. Support sits around $4.30K, $4.50K, where the 20 and 50-day moving averages cluster. A break below $4.20K, $4.30K risks a deeper mean reversion. RSI mid-band, MACD flat to positive, ETH is neutral but stable. However, don't forget, late September saw nearly $800 million in ETF outflows, the heaviest since launch. That overhang is why breakouts keep stalling. Bullish trigger, close above $4.85K, $4.95K with spot-led demand $5,200 short-term, $5,500 if flows flip green. Bearish trigger, lose $4.20K, $4.30K open door for deeper retrace. XRP is doing what XRP does, range trading. It's been stuck between $2.80 and $3.10 for weeks, and every time it hits $3.10, $3.20, the breakout fails. Support remains $2.84, $2.90, below that, $2.70, $2.60 opens up. Momentum's neutral, and unless we get a high volume breakout with spot leadership, it's just a waiting game. Bullish trigger, close above $3.10, $3.20 with OBV rising targets $3.30, $3.50. Bearish trigger, close below $2.70, $2.75 sellers back in control. Solana continues to hold its trend structure beautifully. The base is $195, $205, the pivot's $225, $235, and the key breakout wall is $245, $250. A daily close above $250 opens the path to $260, $280, but don't expect fireworks unless Bitcoin and ETH are stable. Remember, Sol saw a record $145 million single-day ETP inflow in mid-September. That's institutional demand you can't ignore. Bullish trigger, close above $245, $250 with spot dominance $260, $280 next. Bearish trigger, sustained close below $195, $200 trend violation. Fundamentals, why this still matters. Bitcoin, the structural bid remains intact. ETF demand hasn't vanished, it's just rotating. Flows are still historically high, and if price reclaims $120K plus with net inflows, the bulls regain control fast. Ethereum, still the institutional workhorse, ETF/staking, stablecoin rails, tokenization. The recent outflows are a short-term headwind, not a long-term flaw. XRP, US legal clarity plus the SEC's new listing standards open the door to easier institutional exposure. But the price won't move until liquidity and volume confirm it. Solana, the institutional alt. Developer growth, treasury allocations, and ETP demand put Sol in the same class as ETH for many desks. It trades high beta, but with real backing. Market sentiment, cautious but watching closely. post-crash psychology remains fragile. Options data shows traders hedging dips, not chasing breakouts. Social sentiment is mixed. Most traders are waiting for confirmation from flows and key levels, not narratives. The mindset right now. BTC, hold $120,000 or retest $112,000. ETH, flows must stabilize. Sol, leadership if $250 breaks. XRP, prove it. This isn't fear, it's realism. And that's often how solid base building begins. Actionable trade plans: buy, sell, wait. Bitcoin. Buy, on daily close greater than $120K, $123K target, $125K, $130K. Wait, inside $112K, $120K range, follow ETF prints. Hedge, close less than $107,000 equals open risk to $102K, $105K. Ethereum. Buy dips, $4.3K, $4.5K with MA reclaim. Add, on breakout greater than $4.85K, $4.95K, $5.2K, $5.5K. Cut, close less than $4.2K, $4.3K, channel break. XRP. Buy proof, volume led close greater than $3.10, $3.20, $3.30, $3.50. Wait, inside $2.84, $3.10. Reduce, close less than $2.70, $2.75. Solana. Buy continuation, daily close greater than $2.45, $2.50, $2.60, $2.80. Buy dips, $1.98, $2.05 with BTC/ETH stability. Step aside, below $1.95, $200 equals trend violation. Alts, keep exposure under 5% until BTC greater than $120,000 and ETH greater than $4,900 for at least one full session. Focus on liquid L1/L2S and DeFi projects with real revenue, the assets institutions actually buy. What could flip this outlook? Policy headlines: any new trade or tariff comment could shock thin weekend books again. Flow shock: if Bitcoin ETPs see another outflow week, upside will stall. Microstructure: over-leveraged perps plus rejection at BTC $120,000 or SOL $250 equals air pockets. Final thoughts: this market is rebuilding trust after the biggest liquidation in its history. The flows are there, the infrastructure is maturing, and the data, while mixed, isn't hostile. What we're watching now is confirmation, reclaim levels, volume follow-through, and steady ETF prints. Once those align, this next leg could be powerful. Disclaimer: this analysis is for informational and educational purposes only. It is not financial advice, and I am not a financial advisor. Crypto is volatile and can result in total loss. Always do your own research, manage risk carefully, and trade with discipline. If you found this useful, hit like, subscribe, and turn on notifications for the next crypto roadmap and weekly flow breakdown.